Hello and welcome to Agents of Nonprofit. My name is Alexander Lapa, and I'm here to speak with everyday superheroes helping nonprofits. Joining me today is Rolanda McDuffie to talk about finance, so financial stuff I know very, very little about, and I'm very excited to talk about. Rolanda, welcome to the show.
Thank you, Alex. Glad to be here.
So I am curious to know, what is your superhero origin story?
My superhero origin story is that I got started working with nonprofit organizations about 25 years ago. I would say I fell in love with accounting. And when I went to college, I majored in accounting, but I also took an elective for nonprofit and governmental accounting. At the time, I didn't know what I was going to do with this elective, but I knew that I appreciated the work that nonprofit organizations were doing in the community, and I wanted to be a part of that. So after graduating from college, my first volunteer job, I guess you would say, with a nonprofit organization was with my church, and I was the church treasurer. And since then, I have worked with nonprofit organizations in so many different capacities, from volunteer to board member to an employee, as well as being a contract employee for nonprofit organizations as well.
That's really cool. My dad, for the longest time, also was a treasurer of the local church because he also had a financial background. So you guys have that in common.
Oh, wow.
And today, what services do you provide today? Because I know you have your own consulting firm. So if you could just let us know what you what you do today.
Sure. So yes, I do have my own CPA firm, and I do work with nonprofit organizations and helping them complete their Form 1023 to get their tax exempt status, as well as providing monthly and quarterly bookkeeping and accounting services. We also provide part-time CFO services, as well as cash flow management, budgeting, forecasting, accounting software training, setup and support. We offer full service payroll, as well as preparation of the Form 990. In addition to that, we also assist nonprofit organizations in getting ready for their audit. So we have a service called Audit Readiness, as well as we provide audits, reviews, and compilations, financial statements for nonprofit organizations. In addition to that, we also provide board advisory services and board trainings as well.
That is a huge suite of services. I tried my best to write them all down. I missed a couple of them, but we'll try to review at least the topics of each one of these things, or most of them, the more interesting ones. So are these tend to be more for smaller nonprofits, medium-sized, or larger-sized nonprofits?
It kind of just depends on the organization. It goes for small to medium-sized to large organizations. So, we kind of work with nonprofit organizations from the infancy all the way up, just depending on where they are in their growth stage would depend on the level of services that we do provide.
Okay. And then is there a particular trigger or a set of conditions that a nonprofit would feel or go through to say, you know what, this really shouldn't be done, or we don't have the expertise to do it in-house. Let's look for an external help to help us with all of these types of things. What would be the conditions for that?
Right. So most nonprofit organizations should have a treasurer on their board to assist them with review and understanding of their financials. I will say, though, that nonprofit accounting is totally different from for-profit accounting. And so if you don't have board members or staff members on hand that understand the difference in nonprofit accounting versus for-profit accounting, that will be the ideal time for you to reach out to a CPA or someone to assist you with your finances. But then in addition to that, I also help them set up their organization as well as creating their budget. So even at the beginning of their organization or setting up their organization, I assist with that portion and can assist with creating that first budget that they would need in order to kind of get started with the growth of the nonprofit as well.
And because I'm financially illiterate, is this something that can typically be done themselves? A nonprofit can do them themselves if they have certain relevant experience? Or is it something like just typically beyond the average nonprofit where they are probably better served to outsource of this task completely?
Yeah, so if they have the experience on their board, that's great, but it's difficult to get that level of experience on their boards. And so many times it requires them to go out and get that assistance from outside help. And in addition to that, I believe nonprofit organizations don't know what they don't know. And many times they don't realize the complication of nonprofit accounting versus for-profit accounting. And so a lot of times people will take on the assumption that it's very similar in nature. And so they move forward with that thinking in mind as well.
Yeah, that was kind of where I was heading in that, if you're a founder, relatively new organization, you might want to try at least to do everything yourself, right? Because that's part of the pride of it. You want to get involved in everything. But there's obviously limited time, limited resources. So you can't do it all. And then there are moments, especially when you don't have that kind of help, to look for it outside to be able to give you the best possible outcome that you have. And to use another example is it happens often in technology, right? Nonprofits and technology don't usually work together too well. And they don't have always the technical experience. So going to get help from a technology perspective is generally a good idea.
Yes.
In quotes there. So I'm thinking, is the financial side of things in a similar aspect, or am I off the mark?
It is very similar, because I think when it comes to finances or accounting, either you like it or you hate it. There's usually no in between. And so if you don't have that knowledge base, it's difficult. It's a difficult concept to pick up and just roll with it if you don't have that background.
And there are some major consequences if you get it wrong, right? If you misfile your taxes or you misfile paperwork, I mean, there's a financial consequence, a negative financial consequence.
It is. And part of the reason why I started this audit readiness service is because a lot of nonprofit organizations, they understand when they get to a certain level or they want to get a certain amount of funds from a donor, they need to get an audit. The issue is many of them are not ready for an audit because they've kind of done things the way that they've always done things without really understanding what they should be doing. And so when it's time for them to get an audit, they find that their financials are not necessarily in the condition or the shape that they need to be in order to pass or have a successful audit.
And would you say that's a common entry point for people picking up the phone and calling you to say, look, we've been audited, we need to be audit ready, please help us?
I would say it's probably the other way around, where they pick up the phone and they say that they're ready for an audit, and they don't realize that they're not quite ready for an audit, which is why I decided to go ahead and start with this audit readiness service.
So tell me, what do you need to be ready? Because I'm coming from a lack of experience here as well. But what does that process look like? If high level, is it, how do you get ready for an audit? How do you think you're ready? How do you qualify whether you're ready? Like, what is the process that you guide them through in the context of going through an audit?
Sure. And it starts with having organized financial records, right? So you want to make sure that all the financial documents are well organized. And that includes all the receipts, the invoices, the bank statements, the ledgers. Also the board meeting minutes, because they outline a lot of imperative decisions that the board is making regarding the financials as well. And so that's an important piece of the review process in an audit. You want to make sure that you have complete and accurate documentation. So that means making sure that all the financial transactions are fully documented, both within the system as well as in the paperwork itself. Keeping detailed records of those expenses, the incomes, the grants, and the donations. If they're over, $5,000, making sure that you understand who those donors are and you have their information. Ensuring that you have strong internal controls within your organization. And that means, putting or implementing systems that's going to prevent or detect errors or fraud within the organization. And this can be done by making sure that you have segregation of duties. So that means that there's a separation of duties when it comes to the finances to prevent those fraud issues from happening. That also means regularly reconciling your bank statements and credit card statements to ensure that you have all the transactions recorded. And then making sure that there's an approval process in place for any expenses that are being paid out within the organization.
So this
Also
sounds...
include. Oh,
Go
I'm
ahead,
sorry.
sorry.
I was going to
Keep
say
going, please.
also making sure that you prepare financial statements. So you want to make sure that the financial statements that you prepare are accurate and comprehensive, including a balance sheet, or also known as a statement of position in the nonprofit world, an income statement, which is known as a statement of activities, and a cash flow statement as well. And then there's also a fourth statement, which is the statement of expenditures. So it outlines the expenses and how they were paid out based on the different buckets, or I should say expense categories for the nonprofit. And then last but not least is making sure that you have policies and procedures documented, so that we understand how the finances should be recorded within the system and who has access and control over those finances as well.
Okay, that's a lot of information, but it also sounds like a checklist of things to do. Like it sounds like you have just, here's a list of things that need to get done, reviewed, approved, signed off, documented, tracked. And it's just basically a list of, I don't know, maybe 20 of these things. Off the top of my head, it sounds somewhere around that number. Are there any variations to that? Like, are there exceptions or things that you have to consider that are not part of a standard checklist? Like if they have, I don't know, property or other types of revenue or something like that?
So I didn't even list all of the things that are on the checklist, but those are the important parts of the checklist. So there is a wide variety of other things that need to be in place. But like I mentioned, that those are the most important things that you want to ensure that's being done throughout the year, and not just at the end of the year.
Okay, so it is really a tree of decisions almost at this point, where you have everything that is the basic foundational type of stuff you need to do, and then if you have this, then you need this. If you have that, then you need to do this in addition, and you kind of go through a tree of getting all the way down to the roots, and then saying, "Okay, guys, you're great. You've done it all. We're in good shape." Would that be a fair statement to say? Yeah.
Yes, that is very correct. So, for example, there may be an organization who owns a building, and so they have to depreciate their assets, whereas another organization, they don't own any fixed assets, so they don't have to worry about that. So, yes, it just depends on the organization and their financial situation of what should happen or may not need to happen.
And approximately how long does this process normally take to do? Is it, like, assuming they're starting at not starting at absolute zero, that they've done some pre-work, are we looking at about a couple of weeks of work, a couple of months of work, longer?
So if we're talking about a pre-audit or the audit readiness service that I offer, that generally takes about 2 to 3 days for us to go in and get the organization ready for the audit. But if we're talking about an actual audit itself, that could take somewhere between 2 to 3 months, just depending on the size of the organization and what needs to take place within that audit.
Okay. And 2 or 3 days is enough to get them ready for it? You said it's a pre-audit? Is that how you phrase it?
Yeah, audit readiness.
Audit readiness.
So what we do is we go in and we take a look at what the organization already has in place. And then we outline some systems that they can put in place in order to get ready. We don't necessarily do the cleanup work, but we inform them of what needs to be done so that they can clean up their books so that they are ready for the audit itself.
Do you typically circle back at the end of that conversation when they say, we think we're ready to verify the work that they've done? Or is it more like, here's the instruction guide, follow it, and we'll talk to you later? Or not talk to you later, sorry.
That's a great question. So yes, we do initially go in and we do the setup for them. And then once they've done or made the necessary changes that they feel that need to be made for their organization, then yes, we will do a follow-up to ensure and answer any questions that they may have as well after they've gone in and did their own due diligence.
Okay, so that's anything more to say about audits? Because there's obviously more topics I would love to cover. And of course, this is meant to be a high-level conversation. We'll make sure people have the ability to get in touch with you later on for other follow-up questions. But in terms of the audit perspective, is there anything that you would be able to offer to our listeners, things to consider, things to be careful of when going through this kind of audit readiness or a full audit?
I think the biggest thing that you want to do when you're going through an audit is making sure that you answer all of the auditor's questions. I mean, you're providing the documentation when it's being asked and not delaying. It may make some auditors particularly cautious of what may be going on behind the scenes if you're doing things like that to avoid questions or preventing providing documentation. So you just want to be straightforward and transparent when you're going through an audit.
That sounds like very sage advice. So let's move on then to, and I don't think you mentioned it earlier, but there was one of these things that I also was curious about is about grants, because I think grants is a very tricky topic. You and I in the pre-show had talked about grants that there are definitely ways of requesting, applying for, and then obtaining the grant. But the key question is, okay,
Yes.
great. Now that you've got the grant, what now? And I think that's a great question that I wanted to bring up during our conversation to say, what can a nonprofit do to prepare themselves for actually winning the grant? Is there any pre-work that they should do before actually receiving the grant? Or should they wait until they get the grant and then make decisions? And if so, what does that look like?
Right. That's a great question. So when it comes to grants, you want to make sure that you're preparing a comprehensive budget that you're including with that grant application. And so that means preparing a detailed and realistic budget that includes all of your expected expenses and revenues, not just the revenues from the grant itself. You want to make sure that it all aligns with the projected plan that the donors are asking for. And then just providing, justification for each of those budgeted items, explaining why it's necessary for this particular project. And then the other thing, you just want to be aware of any of the funders' policies on indirect costs and ensure that you either include or exclude them from the required documents that you're providing to the donor when you're applying for a grant. Those are some important things that you definitely want to consider. And then also, depending on the size of the grant that you go for, they may be asking for audited financial statements. If your organization is not in a position to obtain an audit, then you may want to consider going after funding that does not require an audit. But I will say too, after you get the grant, after receiving the grant, you want to make sure that you review the terms and conditions of that grant so that you understand the funder's expectation, their reporting requirements, as well as allowable expenses and timelines for providing information or updates on that grant. Many nonprofit organizations do not do enough due diligence in reading and understanding the grant agreement, and they find themselves with expenses that aren't reimbursable because they went outside the actual terms and agreements for that particular grant.
And that's actually really key too, because I've heard also horror stories, or let's say unpleasant stories, where a nonprofit received a grant, but there are conditions to it, not just what they can and can't do with the money, but also for reporting purposes, that they need to report on how the money is being spent over a certain period of time. And sometimes some organizations aren't prepared for that. So making sure, like to your point, of reading the conditions and making sure that you're able to fulfill them. And I'm curious on that note, is there an opportunity for a nonprofit to receive or win the grant, but for some reason is ineligible or unable to fulfill the terms of the grant? What happens in those situations?
And when you say, I'm sorry, let me ask, when you say they're unable to fulfill it, it's because they did not spend the money correctly, or they just didn't have, or they weren't able to spend it because they didn't have the ability to? Because it can happen two different ways.
I don't know the answer to my own question, but what I was thinking about was, so let's say let's say there's a condition where they have to, let's go two scenarios. The first scenario is the nonprofit is supposed to spend money in a particular area and they didn't. So they didn't meet a minimum threshold. That's scenario one. And then scenario two would be, let's say there's certain reporting requirements that they have to report back to the grant provider on certain things, but for some reason they can't or they don't. Like, is there a certain slap on the wrist that they get? Is there a possibility of them deciding in advance, listen, we can't meet the requirements of this grant, so therefore we're not going to accept it? Or is there a possibility that the grant will end prematurely? Like, that's more, I'm curious to see where the pitfalls are.
So I would say if a nonprofit organization feels like they cannot meet the requirements of the grant, then at that time they should either let the donor know that they can't accept the funds or maybe get a fiscal sponsor that could step in and help them meet those qualifications for the grant. I have seen at times, going back to your scenario one, where if a nonprofit organization does not have the expenses to qualify for the grant in that particular year, then they have to send the money back to the donor if they don't use all the funds. And no one likes to do that, right? So it's important that you're documenting throughout the year and keeping track of what you have and haven't purchased so that you're not required to send that money back if you didn't use it. Going to example number two, it depends on if it's a reimbursable grant or if the grant is paid up front. If it's a reimbursable grant and they spend the funds incorrectly, then they will not get reimbursed for the monies that they spent incorrectly. Now, if it is a grant that they've already received the money for, and they spent it incorrectly, the donor may ask for those funds back as well because that money was not spent correctly. And they may jeopardize their ability to get that grant going forward just because they did not honor the grant agreement.
So I think the theme here is that just because you get the grant doesn't mean you've won the lottery and you can do whatever you want, right?
That is very clear.
There are rules or regulations to follow. There are conditions to follow. Make sure you know what you're doing because as long as you do, you should be in good shape and you'll be able to keep on going. Any other tips about grants? Because this is a great topic. I know there's a lot more we could talk about it, but I wanted to stay high level again. So is there any other tips that you can recommendations, things to do or things not to do in the concept of grants?
Yeah, you just want to make sure that you're monitoring those grant expenditures regularly to make sure that they're in line with the budget and comply with the funder's requirements. And then just preparing and submitting the timely financial reports as required by the funder, making sure that the accuracy and completeness in these reports are up to date.
Perfect. Cool. General accounting, because you said you do a bit of accounting as well and payroll. So changing topics to accounting, you mentioned that nonprofit accounting is different than for-profit accounting. And even if a treasurer has experience with the latter, they might not have experience with the former. How difficult of a switch is that? Like how different, or could you maybe give us some examples of how nonprofit accounting is different than for-profit accounting?
Sure. So one of the biggest differences between the two is the fund accounts, right? So fund meaning whether or not the monies that's donated to the organization are temporarily restricted, permanently restricted, or unrestricted. And so as the money is coming into the organization, it's imperative that you're keeping track of the donors' restrictions or restrictions that they may have put on that money. So for example, if you are a nonprofit organization that does after school training for the children, maybe someone gave a donation and they stated that the monies that they're donating can only be used for books for your after school program. So that is called temporarily restricted funds. Now, as a nonprofit organization, you can only use those funds to purchase books for your organization. Now, if you don't use all of the money this year, then you have to keep it in that restricted funds until the following years that you use the money specifically for that reason. A permanently restricted fund would be something like an endowment, where they're stating that you have to hold the principal amount as a restricted asset, but the organization is maybe able to use the interest that's earned off of the endowment investment to run the operations of their organization. So for that perspective, the endowment piece would be permanently restricted, but then the interest that's earned is unrestricted income for the organization. Now, if someone donates money and they don't put a restriction on it, then that money can be used for any purpose that the nonprofit has a use for it. It could be for rent, for salaries, for office supplies, or even programming. But they have to keep track of those funds and how that money is being used within the system itself. The other difference, large or big difference between a nonprofit accounting and for-profit is when we're talking about the P&L or the statement of activities in the nonprofit world, It's important that you keep track of the revenue and expenses in the buckets of administrative cost or operating cost. And then you have your programming cost, and then you have fundraising expenses. As a nonprofit organization, you have to keep track of those, the revenue and the expenses in each one of those buckets. So, for example, you can have office supplies, but then have an amount of maybe $200 for administrative and then $700 for program expenses, whereas a for-profit organization is just going to be labeled office supplies. So those are the two biggest differences when it comes to the difference in how the reporting of the financial statements look. And then in addition to that, I will also say when it comes to the balance sheet or the statement of position, there's no equity section in on that balance sheet or statement of position. It's called the net assets. So the net asset section is taking the assets and subtracting the liabilities, and what's left over is considered the organization's net assets instead of the organization's equity section.
Okay, I tried my best to follow that as best as possible.
I know it can be confusing.
No, this is great. I mean, this is you provide. I know this is great information. It's just above my knowledge or skill set for sure, but it's great. I love it. What I'm also hearing from all of this is there is a possibility that there is a bit of profit at the end of the year. And I've always wanted to ask someone this question. I'm going to ask you, what do nonprofits typically do when their expenses don't match their revenue and they do have a surplus? Because but I understand that as nonprofits, you're not supposed to carry much of a profit. So what are options that organizations can do with a surplus of revenue?
I am so glad you asked that question, but that is a myth. It is a myth that nonprofit organizations should not carry a profit. The term nonprofit actually came from the fact that the founders or directors or leaders of nonprofit organizations cannot profit off of the organization. So they can get paid if they're providing a service, but they cannot profit the same way that a for-profit owner would profit from their organization. So nonprofit organizations should carry a surplus because we don't know what may change year to year when it comes to economic activities. If they have a shortcoming in the next year, to be able to have something to fall back on, especially if they don't receive some grants or other fundraising activity that they were expecting, we want to make sure that they have a cushion, as well as if you're thinking about any capital campaigns going into the future, whether we're talking about a building or equipment, those things cost money. And so over time, you have to build up a surplus so that you're able to invest in those capital activities or capital expenses in the future going forward as well.
And is it just a matter of putting that surplus into some kind of fund or investment account or even savings account just to have it sit there, collect some interest, and then use as needed? Or is there other considerations that nonprofits should do with that extra money?
Sure, that's a great question. So depending on the organization, some organizations have set up an investment policy of what that looks like, whether or not they have a certain dollar amount and when their savings account reaches a certain dollar amount, then they may invest those funds in a particular investment strategy that the organization has set up. So yes, it could be that the money is sitting in a savings account, or it could be invested so that the organization is obtaining interest over time as well.
See, this is why I love having these conversations, because I learned something today. As much as I love working with nonprofits, I never knew as much as I know right now about the financial side of things. So thank you so much for sharing that.
You're welcome.
Anything that a board can do to help? I mean, we talked about a board member potentially being a treasurer, but in the realm of audits, in the realm of grants, in the realm of surplus revenue, what is typically what is a board's involvement in these kinds of financial decisions or financial topics?
Yeah, so the board of directors plays a crucial role in overseeing and supporting the financial health of a nonprofit organizations. And it's done in several different ways. When we talk about, financial expertise, it may not be an accountant or a CPA on their board, but it may be a financial advisor or someone who has a background in running a business so that they understand what the numbers look like, right? So, relying heavily on the board to provide their input on decisions that are being made around the finances in the organization. When we're talking about, oversight or risk management or even strategic financial planning, the board should be heavily involved in that. In addition, just the policy development. So we talked about the investment policy, creating those different types of policies within your organization so that your organization can grow. That's very helpful part of, being on the board as well. And then, just supporting the executive director and the finance team. So working closely with the executive director and the finance team to provide support and guidance on financial matters, just serving as advisors or sounding boards for financial decisions, by offering expertise and perspective that someone else may not have thought about. And then one of the most important roles of board members is, fundraising and resource development. So actively participating in fundraising efforts to increase revenue and reduce the need for debt. This can include, leveraging their personal networks and organizing events and identifying potential donors to help the organization raise money. So the board should be heavily involved in the financials, even if they don't necessarily have a strong finance background. There's so many different ways that they can assist as a board member in this financial arena, even though that may not be what they do on a day-to-day basis.
It kind of reminds me of like my condo administration board, right? Where we have the condo administration meeting. I had it actually 2 weeks ago. They went through all the finances of things before getting on to the more logistical parts. I was sleeping through the first part because this is how much I'm involved in accounting. I figure that there are people who are smarter than me that will understand and ask good questions about the finances. But this is where I'm coming from in terms of perspective. So it sounds like even if you're on the board, though, you can take that position. You do need to be at least involved, understand the finances. You can't take my position, which is just snooze it off and let somebody else manage with it. Would that be a fair statement?
That's correct, because it's difficult to make those other pertinent decisions on the board if you don't really understand what's going on financially from the board, right? Because
right.
If you don't have enough money to start a new program, as a board member, hearing those financials and understanding where you are or what the organization's financial health is currently can help you make a decision as to whether or not you need to start a new service program. And if so, what does that look like? Do we need to do additional fundraising? Do we need partners? So all of it works hand in hand. Even though you may not feel like you know enough, it's still enough for you to help make those decisions that need to be made within the organization.
The other element that I love talking about is technology. And I'm curious to know, how does technology come into play? I imagine you would recommend having some kind of software to manage their accounting of things. But are there other, not necessarily, it's just more categories of software versus the actual brand itself? Are there certain recommendations you make or you like to see that you think would help an organization manage all of this financial stuff?
I'm definitely getting that online bookkeeping system is very helpful. It can enhance the financial management of the organization and make the processes more efficient and accurate, as well as being transparent. Using the accounting software, it allows you to create different types of reports that you can provide to the board, as well as giving them, nice little dashboards for people who don't necessarily like finances. So maybe giving graphs so that it's easier for them to read instead of looking at a P&L statement. And as well, plugging your online fundraising activities into your accounting system so that as people are donating online, that information is just being fed into your accounting system, and you don't have to go in and manually enter that information. It's already being automatically updated. That's very helpful, I found, with nonprofit organizations as well.
Well, graphical dashboards are definitely my friend. Much easier to understand those. Cool. And the other thing, of course, regarding technology is AI. As AI becomes more and more pronounced in the world, I heard rumors that accountants are one of the earlier jobs at risk because of AI. And I'm curious to know your perspective on it. Is it something that, financial people should be leveraging and using AI to make their life easier? Or what is your opinion about the impacts of AI in the financial realm for nonprofits?
I do think that, AI is going to make a lot of the mundane tasks easier, even when it comes to accounting. I do believe, though, that there are some areas that may be a little bit more trickier to adjust when it comes to AI. For example, understanding the difference between an asset and an expense. So if someone went out and purchased some equipment for their organization that cost $10,000, most people would categorize that as an expense. But, being a CPA or, having a financial background, I understand that that's really an asset. It's not an expense. So it shouldn't show up on your P&L statement. It should actually be on a balance sheet. I'm not going to say that AI cannot catch up to that, but it's just certain things about accounting that have nuances that may make it a little bit more difficult when we're talking about large scale accounting systems or large organizations. For the smaller organizations that have more simplified accounting, it may be easier to transition into AI from that perspective, as far as, the data entry. So there's some accounting softwares that already include AI in it as far as categorizing transactions. There's algorithms that are created. So, for example, if you visit a particular vendor 3 or 4 times and you categorize it the same way in um, the system automatically knows the next time you enter it, it will ask you whether or not this needs to be, for example, categorized as office expense, because the last 3 or 4 times you've entered it for this vendor, it was under office expense. There may be times, though, and this is where it may require some human contact, because maybe you went to this particular store and you didn't buy office expenses or office supplies, but instead maybe you purchased furniture, which again is an asset, right? So the system is not going to necessarily know that if it's just looking by the vendor and your prior history. So again, I think that there may be still some need for some input from a human from that perspective. But then I think for me, as far as accounting, the way that I currently use it is to help with more financial analysis and understanding where the business is going based off of the history, to be able to create that story to help create the story to tell for those who are reviewing the financial data.
That makes sense. And I also have used an accounting software where AI is present, and you're exactly right. Once it sees like this is a meal and expense, meal entertainment expense, it actually sometimes does certain transactions or pre-transactions for me, and I just need to confirm them as opposed to actually doing the transactions and then confirming them. So I'm happy to see that AI is having a positive effect, and if it is used well, it can just speed up things and make your life easier.
Yes.
Cool. So I think we covered quite a few of the topics I was hoping to cover today. Was there anything else you wanted to add before we end the show?
I think maybe I just want to add about my book, maybe helping them, grow their organization.
Yeah, for sure. So tell us about your book.
Yes. I wrote a book called Creating a Successful Nonprofit by Knowing the Numbers. It was written specifically for founders and board of directors of nonprofit organizations to help them not only understand their fiduciary duties and roles and responsibilities, but also help them to know what numbers that they should be looking at to help their organization grow more successfully. And so it is not necessarily about accounting and bookkeeping, but again, about how to grow your organization by looking at specific numbers.
Cool. And how do people get access to it? And how do they get access to you? If they have follow-up questions, because I'm sure there's a lot of questions that will come out of it. I hope there'll be a lot of questions that come out of this. How can people get in touch with you and get a copy of their book?
Sure. So the book can be found on Amazon, and it can also be found on my website, and it's RS McDuffie, McDuffie.com. And you can also schedule a consultation directly on the website. You can click a button that says schedule a strategy call and schedule a consultation with me as well.
Awesome. Rolanda, thank you so much for joining me today. I learned so much. This was a pleasure.
Thank you. I appreciate being here, and I appreciate you asking me to join you.
All right. Well, that's it for today. I'm Alexander Lapa, and I hope you join me again in the next Agents of Nonprofit.